Financial management starts with a plan. This applies to both individuals and companies. It is not enough to have cash and other resources today. Such resources, if not managed properly, can be wiped out. Hence, financial management is a must. From the perspective of corporation, financial management deals with decisions that are supposed to maximize the value of shareholders' wealth. This means maximizing the market value of the shares of stocks. Shares of stocks represent the form of ownership in a corporation. The changes in the price of a stock can be confluence of many factors: profitable operation, nature of the business, prospects of the business, projected earnings and time frame for the realization of the projected earnings, ability to meet maturing obligations, appropriate capital structure, dividend policies, investing decisions, management and market sentiment. The financial system links the savers and the users of funds. Shown in the figure is an overview of the financial system. Savings can come from households, individuals, companies, government agencies, or any other entity whose cash inflows are greater than their cash outflows. The financial system, through financial intermediaries, provides a mechanism by which the savings can be channeled to users of funds, borrowers, and investors. Some of the financial instruments issued by users of funds, such as the shares of stocks and corporate bonds of publicly listed companies and the debt securities issued by the national government, can be traded. The financial market provides a system for the trading of those securities. The Philippine Stock Exchange offers facilities for the trading of shares of publicly listed companies. A company can be publicly listed through an initial public offering, where shares will be offered to many investors. The offering of the shares will be coursed through an investment bank, which will underwrite the offerings of the shares. Corporate bonds and government debt securities can be traded through the Philippine Dealing and Exchange Corporation. As shown in the figure, the same entities can be savers and users of funds. One entity may have savings today, but may be needing funds in the future. For example, for expansion. Banks provide mechanism where savers can put their excess funds through deposits. Banks give the depositors interest on the money deposited on them. To cover for the interest given to depositors, banks lend money to borrowers after performing a credit investigation. Insurance companies. Insurance companies offer different products. Insurance products can be broadly categorized into life insurance products and non-life insurance products. Life insurance products protects the insured from loss of life, while non-life insurance products protects the insured from the loss of a damage to properties. Stock exchange. The Philippine Stock Exchange provides a system for the trading of equity securities of publicly listed companies. These equity securities are common stocks and preferred stocks. An individual who wants to invest and trade in the stock market cannot go directly to PSE to buy and sell stocks. He has to open an account with an accredited stock brokerage firm where he can channel his buy and sell orders to equity securities. Stock brokerage firms. Investing in the stock market has to be coursed through stock brokerage firms. At present, there are online brokers and live brokers. With online brokers, one can trade in the stock market through the internet. COL Financial and BPI Trade are two of the online brokers in the Philippines. To trade online, one must have an account and deposit with the online broker. Mutual funds. Mutual funds provides opportunities for big and small investors to invest in financial instruments, which they would not have considered on their own, or they may have considered but do not have the time and the expertise to do it. These include investments in the stock market, bonds, treasury notes, and other money market instruments like treasury bills. Other financial institutions. Other financial institutions include pension funds like government service insurance system and social security system, investment banks, and credit unions among others. Financial instruments. Financial instruments are generally classified into two major categories: equity securities and debt securities. Equity securities include common stocks and preferred stocks. Most companies have only common stocks in their stockholders' equity, but some companies have both common stocks and preferred stocks. PLDT and Globe have both common stocks and preferred stocks in their stockholders' equity. A preferred stock has priority over a common stock in terms of claims over the assets of a company. This means that if a company is to be liquidated and its assets have to be distributed, no asset will be distributed to common stockholders unless all the claims of the preferred stockholders have been given. Preferred stockholders also have priority over common stockholders in cash dividend declaration. No cash dividends will be given to common stockholders unless all the dividends due to preferred stockholders are paid first. The Treasury bonds and the Treasury bills issued by the National Treasury are forms of indebtedness of the national government. The Treasury bills, which are in the tenors of 91 days, 182 days, and 360 days, are auctioned at the National Treasury every Monday to accredited dealers. These are eventually farmed out to both institutional and retail investors on Wednesdays.